If it may help keep a couple shorts safe on some setups that they have been, losing on, then great. This is the life cycle of these stocks. They pump the stock, they dump, it goes all the way back to zero. They do a reverse split so that they can stay compliant with NASDAQ and get back over $1. Just understand that you want to be playing more chess and less checkers.
Hey everyone, and welcome back to another episode of Trading Takes. We have a special guest and a special episode today. Roland Wolf is going to be joining us to talk about all things small caps on the long side. So Roland, we've been wanting to get you on the show for a while. You're a master at this kind of stuff, and a lot of people, I think, struggle on the long side with small caps. So welcome to the show, and we're going to talk about a bunch of great things today. So how are you doing?
Hey man, thanks for having me. We've never got to speak until literally right now, and it's kind of always a unique experience like this. But as I was mentioning, I've watched any episode that pops on. I always watch it, and it's always a lot of great value and different guests that I've been learning from. I'm kind of almost into a decade into my career, but every single day I kind of step to the markets and hopefully learn something. And it's cool, watching programs like yours at the moment where you're kind of diving into some other stuff and it's not quite so surface level, so it's kind of cool. And thanks for having me on,
Absolutely. And I appreciate you saying that. And that's what we're trying to do. We want people to be able to watch these episodes, to learn from people who do this for a living, who are professionals, and to be able to apply that to their own trading. So that's all what we're going to do in today's episode. So just as kind of a, to get us going, this episode is a solution to a problem. And the problem is this. A lot of people, they try to trade small caps on the long side, and it goes something like this. They'll look at the large percent gainers on the day. They'll find something that's running, has a lot of volume. They'll go to buy a breakout on it. The breakout immediately fails. They don't really have a risk level underneath it. They'll stop out for a big loss, and then they do that time after time. They get super frustrated. The account's going down, and that is the problem with going long on small caps the way that a lot of people do it. So what we're trying to do is basically show the solution to that of how to actually go long small caps properly. And you have made, you're a 7-figure trader. You've done very, very well doing exactly that, going long on small caps. You've taught other people how to do that. So to just kind of kick things off for us, what is the mindset going into this? Because you describe yourself as like a short biased long trader. And so that these companies are crap. That they're just vehicles that are trying to raise money. That they use news to do that. So what is the mindset that you have to be able to go long small caps and do it successfully?
Yeah. So first off, I guess you kind of have to understand that the way I went about the game of small cap, well, from a mathematical standpoint, obviously massive percent gainers, right? And, we've got something up, I don't know how many thousands of percent today. They're outliers, obviously your CHSNs, but at the same time, I saw that and I always said, okay, so and every single day, there'll probably be, especially in a hot market like we have this year, you have 300 to 500, 150% runners at the moment. But at the time, all the traders that I really looked up to were short sellers. Almost exclusively. And in fact, there wasn't anyone really saying that you could make money long in small cap. Due to everything that you just said, they're really, really scammy, and you get into it and, you think you're going to trade breakouts and someone tells you to trade breakouts or whatever else. We're wired to trade that stuff. Like all that situation that you mentioned where you come in and it goes through high day and you buy it, and then it gets slammed and you're taking a big loss and you're really frustrated. That's how we're wired. It totally makes sense. That's the first, my initial, and that's only because everyone I know is like that. But myself, like when I got in, dude, I could not wait till it got through high day. I could not wait. And you know what? There was no trade until then. For me, I was like, that's the moment where, it's going to break out of this and just keep going up. And I had no, semblance of risk reward. But at the end of the day, I didn't know what I was trading. You know what I mean? I had no clue what the big picture was. So yeah, small cap's really a scam. People say that all the time. Oh, it's a scam. That's why I don't trade it. But actually, I have found that because it's a scam, it's more tradable than anything. That's what I think. I think once you understand what is happening, if you can stay out of the way of the scam, and you can actually profit from the scam to the long side. That's how I feel. I call it kind of the life cycle of these stocks. They're only tradable a few times a year for the most part, any ticker. And so that's really what that comes down to. But I think we're kind of getting away from what the question was. Sorry, you might have to edit this. But what was the question here?
Yeah, it was basically just what's the mindset, going into trading small caps.
Yep. No, so we're still on track. Cool. Mindset. The mindset is that of what you said earlier. So, at the time it was Tim Grattani, man. When I was really getting into the game, so my initial goal, because I didn't have that much capital, and I realized, what, I can't be at any of the short brokers, the specialty short brokers. I'm not going to get shares to short. And then by the time these things are shortable, hopefully they're extended and they're a higher price and stuff like that. I can't afford to short anything really at the moment. Nor did I, was I great at trading. So, but I looked up to people like Tim Grattani. So my goal was to, at some point I realized, holy crap, well, where I'm buying, because Breakout stopped working. Well, it didn't really work for me, like the high day breaks. But I saw, near these highs where I got really excited to buy is where all the best short sellers were, including Tim Grattani, into resistance, into multi-day resistance, where I'm looking for a breakout. He's like a shark just waiting for it to fail so that he can destroy it, or even into that resistance, gap ups into those levels. So I realized, holy crap, I got to realize, like, if I want to be long, I also have to sell here, right? Because this guy's doing so well, and not just him, but all the good short sellers. And then along the way with that, I actually learned what small cap was, right? Which are a bunch of really terrible companies that need money, but they have bad earnings. So their price is not going to go up, and they get really, really bad loans, essentially. I mean, that's really what it comes down to, is that they need cash. And the only way to get cash is to dump shares onto us. So it's kind of a conflict of interest, because they're putting out a PR. And if you look at every single one, and I fell prey to this for a long time, where they put out the PR and I would fall in love with the stock too. Like not forever, but right then and there, I'd be like, oh my God, that's amazing. You know what I mean? I would get so excited. I'd be like, they cured what? Like, oh, they just need one more year, and probably, and I didn't know it at the time, but like $50 million more to get through to phase 3. And then they're still probably going to not cure cancer. So that to me was the whole, there are a lot of traps. And once you realize at the end of the day, it's just a vehicle. That's why they go back down, that it's a supply and demand issue, and it's not going to overcome it. I don't care what the PR is. The PR is designed solely to create action within the stock so that they can put money in their pockets. You know what I mean? And that's solely what we trade every single day. And sometimes years like this year, it's spectacular. They get amazing pumps. They do a really amazing job. So that is how I look at it. And so it's all, garbage to me at the same time. Even intraday price action, when it gets towards highs, through pre-market highs, especially early in the mornings, I get weary. I just understand. And, I have a lot of friends who are just amazing short sellers. I just understand where they are and how they are. And I just never really made the full jump over to the dark side, I guess, is what I'm trying to say. And I really have enjoyed kind of guiding people away from that high of day beginner mentality. But it's not, the thing is, it's not just a high of day, like, beginner mentality. That's what everyone does teach, kind of universally. Like, even if you ask ChatGPT, like, what's a good strat, like, though, that's probably what ChatGPT would even say. So it's like, it's kind of like a universal thing, I guess, that people do that. I don't know. But in small cap, it specifically doesn't work, in my opinion, because of what you just talked about. They have shares to dump. And if I've got millions and millions of shares to dump, I need liquidity. And when that liquidity comes in, I will dump it. And the most liquidity comes in when you get through highs a day in the morning, and you get those short sellers covering, and you get longs piling in, and then it gets stuff there, and it's like, it doesn't mean it can't squeeze later in the day, but they're in the moment, from a price action perspective and big picture perspective, I like to be careful. And you can always go back and match it to some fundamentals, generally speaking. So in other words, fundamentals, right? Fundamentals. It really does drive in a major way what's going on, and kind of the conversation for me, the way I look at it.
100%. And I know that you've talked about in other interviews that you are looking at, like, what are the areas that they're able to dump at, and so a lot of times it is around like high a day breaks. or it could be around, key levels or something where it looks like it should go. All the liquidity comes in, the shorts are covering, the longs come in, and it's like, bam, that's when the insiders are like, we have to sell this when we're able to, not when we want to. So that's when they really slam down those pockets. So, now that we've kind of laid the framework of a lot of these small caps are not very good companies, a lot of them have shares to sell. So, kind of given that, we need specific conditions in order to be able to actually go long them. So what are a couple of the things that you are looking for? Like what needs to set up in order for something to actually, be a potential long other than it just being a big percentage gapper?
Yeah. And that is the golden question, right? That's the question that I've been chasing. Sometimes more successfully than others, obviously, because the markets are always changing, but mostly successfully. For like the last 8 years is that obviously changes all the time. The markets, they're always changing. The nature in which they're moving or not moving is always changing. I always look at it as we're either in a fader market or we're in a squeezer market. And I like to think of it in my mind as and generally throughout my career, 60, 80 to 80% of the time we're in a fader market, maybe even more than that, in certain years like 2022, for example, almost the entire year was a fader market. I maybe just tiny pockets of time where there was momentum. So it is still going to be market dependent, which we can talk about later if you want. But ultimately, what I'm looking for is the small pocket of time where they are going to be running volume through the thing. That's all, and it does come down to volume. And any ticker that we end up going through, you'll see that it's just a blip of volume and then it goes away. And within that blip of volume, there's usually a bigger player controlling action. And if you go to the sites of the bigger players who are the ones controlling action, they tell you they're controlling action. It's not even like a secret, A lot of people on the internet and on social media, especially like the overall markets, SPY and people who trade futures and stuff talk about algorithms a lot. And like the algorithm, but it's kind of more obscure, I guess you could say. In this case, they tell you like they specialize in providing liquidity and illiquid stocks and doing that without affecting price. Basically, they're able to dump shares without affecting price too much by driving liquidity through it. They say it, right? That's what it says on like H.C. Wainwright's website. And it's pretty interesting to see that, okay, everyone's talking about algorithms that come in and you see the absolute astronomical amount of volume that will come in at times. And it's like that's actually is happening. You know what I mean? So there's a couple dynamics in play. And for me, it's understand that all those big players understand what retail longs do, what shorts do, what the institutional investors are doing, and they're in bed with the stock themselves, right? So my goal is to find when the institutional investors and the people who are running the stock, the people in charge of the company are going to collaborate to push their price up as high as they can and to dump shares. I mean, that's really what it comes down to at the end of the day. And then within that, I mean, it can all line up, but it can be a crap market. We're not in a squeeze market per se. And those are the times where you can still get great, like this year, for example, right? We're in 2024, where we got 1 quarter left. This year has been marked for me by massive gappers all year, almost all year. And then it's a matter of, are we going to be in a squeeze market this week or are we going to be in a fader market? Because some of the markets have been spectacular for shorts in terms of like, if you're shorting pre-market or near the open or when pre-market highs rejected, it's been very, very fruitful. But then when the outlier trade hits, and we can talk about this later too, in terms of like how to adapt to this stuff, but that's really what I'm looking for in terms of the overall markets or small cap for me. Like if things are slow, I'm not going to be going hard in the paint to the long side. And when I say things are slow, I mean gappers fade all day. You know what I mean? And there's not really any meat on the bone after the open because all pops get just sold into. And those markets, I tend to just do certain, things a little bit differently. But in terms of what I'm looking for, I'm looking for the one part in the life cycle of the stock where they are actively pumping it. That is it. And then for me, it's just the first few days of that move, if I can, specifically the first 3 to 4 days right now. And as we'll talk about it in a little bit, I've actually gone a lot away from day trading over the last 6 months or so, because some of the swing opportunities have been so great. But yeah.
Yeah, that is fantastic. And so to kind of, summarize some of what you're saying, at least one strategy is to look for a market where there's follow through, where, things are actually getting bought, where there's widespread demand and liquidity, and then looking for something that is basically on the front side of a move. And you have, either institutions or something like that trying to run it up to, for the eventual dump of shares. And so you want kind of the market going in your favor, and you want to be on the front side of that move while you have the institutions or whoever else are still churning it and bringing it higher. So basically everything that a short seller is trying to avoid or kind of wait until that's done, you're still on the front side of that move trying to get in there. And so in order to actually participate in that run up and to not get chopped up along the way, you need, once you have a setup, you need a good entry. And so you are huge on this, and you're one of the most vocal people kind of who trades small caps on the long side to really focus on this of, wait for a dip that you can use to, participate on the long side, because your reward to risk ratio is better. And so even if you still only had a 50-50 chance of being right on it, because your reward to your risk is much higher than someone who is chasing breakouts, you can have vastly better results than someone who is doing it basically at the worst reward to risk ratio. And so, hopefully we can pull up a chart in a minute, but is that a fair and accurate representation of how you're going about participating in these?
Yeah, absolutely. I mean, it's what I like to describe it as, like, I got as far away from Tim Grattani as possible, who does a lot, mostly like, I think a lot of long now for the most part, which is awesome. I remember the first time I met him, we were at dinner, and he told me he didn't think that it was possible to like be long, because at that time he was only short selling. And like I said, and there weren't anyone longing really, like, and it was interesting, but and to see now like his biggest trades be long, and what he's done and to the long side is really cool. But that was initially it. And it still is very much that way. A big part of this too has to do with, well, yes, risk reward, but obviously when we have your HC Wainwrights or any algorithmic entity pushing liquidity through our tickers, it's not just about dumping through highs to me, in my opinion, and how you, and when you watch these things go from lows to highs to lows to highs at times, if I have more shares to dump, I still need liquidity. So that to me is what is kind of what I'm talking about. Is retail going to be there? And then do they have shares to dump? If so, sometimes just because they have an offering and you're above the exercise prices and stuff does not mean that they're not going to keep running it. In fact, they'll make more money. The more they can run it with more volume, the better, obviously, right? If we're working with math here. And not that they really care at the end of the day. They're just trying to get rid of, they're dumping. They're dumping them. So, but why not if they can also sweeten it and make some more money? And the way I look at it is like at lows, if they need more liquidity and if they want to turn, let's get them back to highs then. Why not suck in some more suckers? Why not bring in more liquidity back at highs? But to do that, you got to turn it back towards highs. You know what I mean? And then you play the game of, all right, well, now you're going to have shorts shorting like backside here going into the afternoon. As it gets to VWAP, you're going to have shorts. As it gets to the next level, the next previous lower high from earlier, there are shorts. And every consequent level all the way up to a high a day, right? Where all the shorts are now, if it's going to be get up there, and then maybe it squeezes. So that's kind of the principle, and it can happen in really small time frames or big time frames. But yeah, I'm a big advocate of that, and kind of the lower the better for me, I guess you can say at times, especially in a market like this. Things that look dead in the water intraday or on a multi-day level end up squeezing and breaking out when we're in the squeeze portion of the market that I was mentioning. You know what I mean?
So one of the things that I think a lot of people struggle with is differentiating, a dip along a higher trend versus, the stock's dipping and it's done, it's failing, and now you're on the backside of the move. And I think that's what scares a lot of people from buying dips in small caps, is that they're like, if this is going down, it's probably got bag holders in it now. It's probably, the insiders dumped, and now I'm buying a dip on a stock that's failing. So how do you differentiate between, I'm buying a dip along a trend higher versus I'm buying a dip on a failing stock? And are you able to do that in all markets?
Yeah, it differs at times. Yeah, and really that is the scary question. And to me though, at this point I've rewired myself to where it's kind of the opposite question. To me it's always like, when I'm buying through highs, it always gets slammed every single time. I know that for a fact. When I get to so basically the concept for me ends up being, where are shorts covering? And if enough shorts are covering, and then institutional investors are going to step in, or the algorithm that they're running is going to take it back to highs or towards highs, and it's going to keep churning volume, and I'm short and I'm profitable, then where am I covering? That's always usually the question to me. And so I'll just go back through pre-market levels. I'll go through whatever key levels I have from the morning and find any areas of support, right? At the end of the day, where if I'm a short and I see certain levels hold maybe once or maybe twice, or I might see it break down and then a higher low for the first time, maybe on higher time frames too, that's generally what I'm looking for. I'm looking for good areas where shorts are in the money, and backside or not, you never know. If I'm buying a dip, you never know, if it's a backside. Unfortunately, that's the case. But the beautiful part is it also leaves me a big margin for error. I don't need it to go back to high a day and through high a day to make money. In fact, it's rather the opposite. I make most of my money on setups like that by selling back into VWAP, by selling into previous highs in the first place. So every area where subsequent shorts are going to step in post when they think backside's in, I'm also selling some shares there. That's kind of the concept behind it. Generally speaking, those areas are also, it's sold off a lot. You know what I mean? It's almost oversold at times, right? That's kind of the concept behind it as well. So, in other words, I'm not just buying random dips. It's not like the first dip of the day, generally speaking, unless that's what certain ideas call for, which there have been some like kind of early morning ideas this year based off of pre-market action, which the pre-market action has dictated a lot for me this year of what my market actions have been or not been. So it's been a kind of an interesting year where pre-market has been super, super fruitful. I have some, students I work with who have made asinine amounts of money trading pre-market this year. And then to me, it gets to the point where I'm trading really, really overextended junk already right at the open, it's like straight up, tough to trade. So in other words, the answer to your question is that it differs, right? From market to market. There are some markets where, specifically, I find slower markets where the day ones can be a little bit easier, believe it or not, where it's just like kind of volume's a little bit concentrated. And if there's, if they're going to dump, they dump right into the morning pre-market, and then it pulls and it kind of gets back to some levels of support I can trade. And then, and then I'll take some VWAP I'll do exactly the process I just told you. And there's a single, and then it gets slammed and fades the rest of the day, and I'm gone, So there's that. And then there's markets like this where I'm trying to be there for bigger picture moves, right? And that's kind of the question. Are we getting multi-day movers or not? Because if we're not getting multi-day movers, then I get back into that kind of day one, gap and crap, wait for it to dump, try to get my position. It gives me margin for error, like I was kind of trying to mention, which we can look at later. It gives me good risk reward when I can locate areas like that. And I know that at least they're motivated for today to try to dump some more shares potentially. I know that volume's there, so I know shorts are there. No shorts, no squeeze, right? So all of those things, when they line up, it can lead to some beautiful trading. But it's still market dependent. And then even for myself, it's will ebb and flow based on how dialed my trading is at the time, I guess you can say.
Yeah, totally. And, from what you're describing, I know like in Investors Underground, there's a lot of people who short in there. And, something that Nate hammers home is that like, if you nail something off the open, if it flushes into, that support or anything, that's where they're covering to avoid basically being stuck in a clear out move back up to VWAP. And so where, good short sellers are covering, that's where you're thinking about potentially going long. And then as that clear out move happens, maybe you get a VWAP touch, and then maybe it goes past that, and maybe you get, the next level, maybe high a day where you're selling some more, and then maybe it works out and you get a full breakout and you're able to hang on to some of it. But you're basically participating in the clear out that could turn into something bigger, as opposed to chasing something, that could be okay, but maybe you have a 20% chance of it actually working through high of day, and instead of something where you're buying a dip. So if you're okay with it, I'd love to pull up a chart and have you run through a couple of examples so that people can see, what this looks like visually and what it looks like in, the real world.
Yeah, sure. Absolutely.
Okay, great.
All right. Well, this is the one we were just talking about, because this is today. This is Chinese stuff. So first of all, we're in the middle of sector momentum right now. Chinese sector momentum. There was some stimulus in the China markets. They went nuts, but then they also had this break, this 2-week break. You know about this? You know what's going on in China?
Yeah, with the
Right?
the holidays.
Yeah. So they have like a 2-week holiday in the markets. Meanwhile, we have all of our Chinese tickers and I've been kind of watching Baba's and some of their big cap, if as a gauge for me, and small cap specifically. But this is just the recent move here on Alibaba. And it's getting extended. It looks extended. I'm sure shorts have been kind of chomping at the bit of this, but obviously small cap is kind of my realm. Here's Duo. Here's a great example of a lot of things that we actually just spoke of. FangD Network. Okay. They did an offering today, right? In the midst of all this. Okay. They did an offering. I underestimated this sector, but what happened here, first of all, just to kind of touch on a different subject, because it's really, really important to me. This is how I grew my account early on. And it's a really, really, really is sector momentum, man. Groups of stocks that go up together and go down together, to me, was always a big deal. And that's kind of what we've been seeing this week. Any Chinese stock has been going up for the last few weeks, right? So we've got Duo, obviously that CHMD. I didn't really trade a lot of this stuff. Chinese stuff is really sketch. A lot of these, was it CHMD that's running right now? No, damn it. I forget. Duo, CHSN. Sorry. There we go. Right. Like, this is a Chinese pump and dump. Okay. This is look at that. There's the pump and dump from December 2023. A lot of these tickers are like call room pump and dumps, right? Where they have been driving price up and then literally dumping shares just like this overnight. So that's a lot of the tickers, obviously, that we've been looking at, but also they do crazy things with them, right? A lot of people, and I know you've got a lot of short sellers in your community, and and I feel terrible for pulling this chart up. I'm really sorry, but I mean, I'm just trying to show, like, they're really sketchy, but they can do crazy, crazy things. And this is one of the TOPs, another one from, I think, earlier last year, maybe, or May. Was that this May? I don't think that's this May. That was last May, right? Yep. Last May, right? TOP. They haven't split since then. So this actually went from 6 to 250 in 2 days, and dumped, back down to 2 by the next week. And so a lot of these I've been kind of struggling with, like, I hate trading Chinese pumps. I just do. They're sketchy and illiquid, generally speaking, but Duo, okay, for example, this didn't really, it does fit the multi-day mold that I've been kind of talking about. Okay. It doesn't really fit the intraday mold that we were talking about, because if you go back to day one of their move, which I'll show you real fast, because I always like to give you that kind of context. The way, and just to give you more context quickly, just for your viewers, but I have kind of a specific way of looking at it. We talk about the life cycle of the stock, right? Are they in just dump mode, right? Just low volume, everyday crap where they're just going to fade as they dump and just dump into every dip or every spike over time? Okay. Or are they going to be fresh for a pump? And I'm looking at volume. But what I was trying to show you here real quick. Sorry, hold on. Is kind of the context of the move for me, is this would be a day one. I call this just a day one gapper. Okay. Because just to classify it for myself, what day am I trading in the move is very important for me. This is a day two gapper, right? Day two gapper to the upside. This is a day three gapper. So this is a 4-day gapper. Okay. This is 5 technical gap days. For me, I pretty much live in the first few days. And if it's going to day 2 or day 3, I'm not trading to the long side, even if it's getting that's just personal preference. I've been living kind of in the day 2, and if it keeps gapping up like this, there's just not much for me. This is different because this is driven by macro stuff, right? It's not just one rogue ticker. It was every Chinese ticker. It was the whole Chinese market, and then they took a break. So like the Chinese market stopped trading, and our market is left trading all these stocks over in China. And I'm just really interested to see. Duo obviously did an offering into it, which is smart. Okay, they did this today. Okay, they're holding up really well, and they dumped shares. It's what they do. Let me get into. Let's try to find a better context. This is GLMD from earlier this year. It also gives me a chance to talk about something else because you asked, so when do I trade these? When is it okay to trade these if they're always if they're always dumping? Well, you can see it's not always. They're dumping. They're liquid most of the year, doing nothing, fading, right? They're not doing anything most of the year. That's the whole point. Most of these tickers are doing nothing most of the year except for fading. But you'll see little heartbeats. Like if I scroll out, you'll see, and GLMD, you can see one big heartbeat here, but of volume. That's what I'm looking at. Any time where there's some abnormal volume, and then what does it do then? In this case, GLMD is going to be a chance to show you something else, which is, they did a split too, right? They did a 1-for-12 reverse split. This is the life cycle of these stocks. They pump the stock, they dump, it goes all the way back to zero. They do a reverse split so that they can stay compliant with NASDAQ and get back over $1. And then they pump it to stay over $1 right after they split. Generally speaking, they're going to put a PR out. And this is what I was talking about also. When you understand the scam and when you understand the life cycle of these stocks, you understand there are a couple times where it's almost like insider trading. Honestly, there have been some grooves I've gotten in when splits get really hot and when the markets are really hot. There have been some grooves I've gotten in where, every couple of weeks I'm long a ticker that has a positive PR tomorrow, or the next day. So positioning myself for a PR ahead of time, which, man, when I got in the game and I was watching PRs, I'm like, I wish I would know how that went. Well, this is actually one of those cases where, and of course they can do offerings, they can go bankrupt. You never know. There's bad things that can happen too. But for me, this is the one that really got me excited because there is an actual fundamental reason that they run during this period of time, which is that they just did a split. Okay, so they got to hold $1 for 10 days. Okay, generally speaking, that's it. Once they hold $1 for 10 days, they maintain compliance with NASDAQ. So, and I realized this back in 2018 and became one of my bread and butter setups, which was the reverse split pump. I used to trade it differently back in the day because liquidity was different and the way they traded was different. Back then, I would wait for the PR to come out, and then when the PR came out, I would dip buy it or try to trade it pre-market. I would have alerts ready for it, and then I would just kind of day trade it the day of. I don't really do that as much anymore. I still will, but my whole game now is trying to place myself somewhere prior to the PR. That's always been the game. But that game can get crowded, right? That game can get crowded. Now I'm not the only one who knows that happens. So you'll see even GLMD didn't really fade so much off of 3. They just kind of upticked into a PR, right? So day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is day 13, day 14. It's not an exact science, obviously. Some days they PR the same day. Some days they PR day 2 or day 3. So it just depends. Sometimes they PR and it doesn't do anything, Oftentimes that's the case too. But it's still a really amazing scenario to look into. And it's a great scenario to teach you, like, hey, it's not just buy through high day, bro. It's not just buy through high day. It's in fact, that's the worst. That's checkers. There are some ways to take advantage of what I was trying to tell you, that there are life cycles of these stocks. There are only certain times to play them. And post-split is one of my favorite times. Post-split, why? Well, first of all, they're a low float. Second of all, once you start to dig in, and we can kind of move on from this, but once you start to dig into the scenario, there are quite a few rules around post-split, what happens, and their float size and their price and all that stuff. That can kind of dictate, when and where to trade them a little bit more. But really, at the end of the day, I don't start getting split heavy in my trading until I see a split become an outlier runner, like for the week, if that makes sense.
Yeah. So basically what you're describing is that, when you're thinking about longs in small caps, that it's an entire life cycle of something happening. So you can't just look at the technicals and say, oh, because it broke this level, it's a good time to go long, but it's more about identifying, why is this running? What theme or what kind of setup does this fall into? And in this case, this is like a reverse split kind of pump theme. So now that you kind of know what you're dealing with, now you can anticipate, how does this kind of play out? So if we could get like a more granular look at
Yep,
this, like
that's
if
what I
you were
want to
to,
do.
yeah,
That's
if
what I
you were
want
to
to do.
play this on the long side, where would you be looking to really get in? Could you show an example of like the dip that you might be interested in and where you'd be selling along the way?
Yeah, so the interesting thing on a chart like this, the problem is let's go pre-split, pre-pump, right? Pre-PR. And here's the issue is that you can see this day and then big move day. But for me, this is one where, yeah, day 3, day 4, when I get a base sub 3 on some of these, if I can get a base or a green day, this wouldn't have really, honestly, if I were watching this, because what I do is the second that every single ticker that splits, the day of the split, it goes onto a watch list for me. All right. So I start tracking it immediately. There's no split that happens where I'm not already watching it. And it's one of the things I love about this is that I get to watch it first. And we're going to kind of break this down. This isn't actually ideal. I don't know if we'll kind of go through a few more tickers. Maybe we'll find an ideal one. But either way, I'm looking day 3, day 4 for a base. Generally speaking, I'm looking for a pullback towards $1 at times. And it's really going to be a little bit market dependent though. Hot markets when splits are hot. And by the way, when GLMD ran, there were some other splits that were running and that it was kind of a hot topic at the moment. But at the same time, these are daily candles, right? So getting into that, this wouldn't necessarily set up ideal for me. And they still did the pump, right? So I'll see these work at times. The whole point is I like working off the idea that they got to hold $1, but it's not always that. It's not always that. Let's get into like the morning action for that day, because if I don't have the swing, I still look at these when they put the PR out. And you can see here's their PR, okay? Here's their split right here, right? They just very illiquid is the issue. Post split, these things are illiquid. So what I like to see personally is an illiquid fade, okay? Because to me, the whole premise is that as it gets down towards $1, they have to hold $1. They're going to want to meaningfully move it away from there. It's not always the case, but I like that idea in my mind. So a lot of higher price splits I'll kind of miss if they do pump them. That being said, morning of, yeah, this is another one. So this is not perfect either. This is actually categorized for me under a early morning spike kind of idea. Like it doesn't really fit in. Is this it? That's the bounce. Okay. So first of all, here's that pump. Sorry about that. Here's the pump. Okay. They put the PR out after hours and it started climbing from 4. It got up to the 5s. Here's pre-market at 4 a.m. Pull back to the 4s, got up to the 7s. Okay. So that would have triggered pretty much everyone. It's a gapper. It's a big gapper that day. My morning setups for morning spikes have all been sub VWAPs, pools sub VWAP. And this specifically, by the way, and this is good for my short seller friends, by the way, if you're watching. And you may have already experienced this and you may have already adjusted. But this year specifically, when we have tickers, so this is a good example because it's still a reverse split pump. Okay, they put the pump out. But it's also one of these tickers that goes over 7 pre-market. Right? This has been a big deal for me all year long, by the way. I have a stupid name for the pattern. I don't know if we even need to talk about it, but it's got over 7, right? From 2, 3, 4 has been kind of a trigger for moves to 10 if they can hold the 5s. That's been the premise of that trade, 5s or 6s, because it's super extended, right? It shouldn't be that extended. If it goes to 7, it should be your shorts are gonna step in. Shorts are already in. Okay. When things do like this, right? Shorts are in. I got an emoji for y'all. I don't know. Do you short at all?
I don't. I do with options, but I don't with equity.
Okay, cool. Well, all of our friends then. This is the way I look at charts like this, man. Literally, that's how I see that. Okay, I I see what it is. There's so much meat on that bone to the downside, right? And then they're going to pile in, generally speaking, and I mentally, that's just kind of how I'm looking at it, right? This is going into high a day over here from pre-market highs. So I literally throw y'all, not you, but short sellers in my mind, that's where they lie, right? So I keep that in mind. And let me see. So in other words, you have people in the 7s who are going to be banking when it's in the 5s. Okay. You've got kind of going up on higher time frames is how I like to look at pre-market when you get a full pre-market and after hours on these things. But here's that GLMD move again, right? Here's that push through 7. And then here's that 5 hold, which has also happened to be some resistance earlier in the morning and after hours previous day. Maybe you have some after hours shorts or something like that. I don't know. But this is this one was crazy. The thing about this move as well is that it also dictates what my favorite swings have also been. So there's reverse split pump. This didn't set up exactly how I would have liked to do it, but it certainly did. They've got that pre-market action through 7. The ones that go through 7 and pull back, generally speaking, I've seen push to 10 almost all year long. Outside of a small handful of times, I've traded it not so successfully because it's still, to me, the lens in which I trade it, it's extended. You know what I mean? It's extended. Even if I understand that they're taking these things to 10 all year long, I've kind of had trouble capitalizing just on extension because I don't like trading extension. We've already kind of discussed that. So what do I do instead on stuff like that? If I miss these, I don't mind. I've actually really appreciated sitting on the sidelines on day 1s this year because the hand starts to play out for me, right? They're going to squeeze it and fade at day 1 or they're going to fade day 1. It doesn't really matter because I don't have to get in the way either way. And then what I've been looking for are day 3s, man. Day 3s or first green day bounces. Those are the 2 setups this year for me and for a lot of the people I work with that have been the most fruitful and the most dependable all year long, outside of the pockets of time where multi-day stopped. So that looks something more like this. We're going to go, for me, all year, my trading process has been a lot like not caring of missing GLMD going to 20. You know, I zero FOMO because I wasn't going to trade it anyways. It didn't set up for me. But then watching those key levels from day 1 for potential day 3 bounces, right? So you can see day 1 kind of getting back to those key areas from day 1. Okay, and we're not even getting into fundamentals right now, and there are some, right? There are some. Here's that day 1 I was talking about. Okay, if we zoom in, I'm sure. Let me see here. Right, so here's a day 2, a week day 2, and it seems obscure, and it is obscure to a certain degree because it's pre-market action for me. But levels like this, I'll go back, on kind of bigger picture timeframes, and I will look for any little bit of spot from the day 1 that might coincide with a level for a bounce. And then I've been looking for the swings. Okay, this is what I call a 3rd day surge. This one isn't perfect. There have been a lot of these this year. Okay, and I think because GLMD got so extended day 1, but I'm trying to think off the top of my head. WHLR just did a reverse split pump right now. There's their split. 1, 2, 3, 4, 5, 6, 7, 8 day fade down to 6 from 20s. Okay, from the 20s. And then they run on a PR from 7 to 20 the last few days, right? That's a reverse split pump for sure. A little bit higher price, like I was mentioning, but a big fade. Also, I think if you go to the filings, they're very dilutive as well. FFIE, remember that one? That was a spectacular one this year. This one didn't really set up the way I'm trying to show you, but generally speaking, what I've been looking for are the fades on day 2 on low volume, and then getting those liquidity traps for day 3, which have been really prevalent this year, in my opinion, for large portions of the year. And then when we get and when you look and you see all these chunks of multi-days, 3, 4, 5 day moves, those 3rd day surge moves for me. Here's UXIN. Day 2 was kind of strong. Day 3, it took a couple days for this thing to break out, and it's doing more stuff now. So it's not exactly perfect, but it's another Chinese play, first of all. So it's another part of this Chinese sector. I missed that and ended up playing, for example, KXIN. Okay, I played KXIN. This is a good example of that, actually. This is a cheaper one, though. So this is a sub-dollar. Okay, this is a sub-dollar, which I consider specifically tickers that come from 10 cents to be bottom bouncers, and specifically 10 cents because there's actually some laws around maintaining 10 cents for these NASDAQ plays to stay listed. So it's another one of those kind of fundamental areas where you will see a lot of pumps off 10 cents. Also, any ticker that's trading off 10 cents or below is almost certainly there because they've been dumping shares in a toxic fashion, usually, right? They've been dumping and dumping and dumping, and anything that they pump into, any pops they dump into. So generally speaking, they're also going to be bigger floats, right? So I keep that in mind, but also generally speaking, when I trade them with like hundreds of thousands of shares, and so does everyone else. Well, not everyone else, but a lot, it's less expensive to take advantage of a stock that goes from 10 to 15 cents and moves 50%. I need to take more shares, all that kind of stuff. So it's kind of a different environment, but it doesn't really change the move itself if we look at it. And granted, this also is driven by macro because KXIN had UXIN pushing without it. KXIN's Chinese, right? And it's a Chinese auto company. They were kind of moving just with all the China momentum they like to move. In this case, I was buying up some KXIN here, and I sold some into this last week, I think it was. That Monday. Was that this Monday? Huh. Yeah, maybe it was. Either way, it's been a long week, bud. So that yeah, so this is one. Let's get into that real fast so you can see. This is a little bit different, like I said, because it's sector momentum with Chinese plays. It is dilutive. Actually, according to when I looked at it last, they had dumped most of their shares, but they had been dumping for a long time. So here's their day one. Okay. I was buying it on this day because of UXIN. Okay. So literally right up in here. I was going to make a video about it soon, but anyways, that because of UXIN running, and then they got a nice pop, right? So I sold pre-market the next day in the 16s. It went to the 30s. And I was kind of butthurt, but it is what it is. Here's the point. This is the day one push. Okay. Here's the day two. And on specifically for bottom bounce plays, and I'm just kind of like giving out all the playbook here, but so for 10 cents, is that all right? I hope it's all right. So for 10-cent plays, if they go from 10 for me to 30, generally speaking, the move is to wait till they get all the way back to 10. Okay. And this is discretionary. When we talk about what we were talking about earlier, how there's a certain lifespan of these tickers. That's why data says don't ever long these. You know what I mean? And I don't know if I'm sure there may be a way, but to me, that's why. But the data also can't account for this, to me, I guess you could say. Maybe it can. But the discretion that's involved with the experience of understanding that and the fundamentals and the supply and demand that's involved of, okay, well, they're pushing volume through and they need to dump shares, so they are going to move it. And that's supply and demand too, right? It's not just that they're dumping shares, it's not just excess supply. They're creating demand. They have to create demand to keep the volume going. Anyways, that's so this is a little bit different too, because Chinese momentum kept going, but I see this pattern all the time. I've been seeing this pattern all year long. And before this year, I was seeing it last year, not in 2022, but I used to see it in 2021. 10-cent plays, they'll pump them to 30 cents. Generally speaking, there's an offering there from earlier, generally speaking. If we go back on KXIN, there's probably some kind of resistance up in that area. Probably here, right? You can see they ran on some volume back then. It looks like they dumped here as well. So there's obviously some stuff up in there, right? And that's how I look at these charts. I just look back, I look at volume. I'm looking where in the lifespan are these stocks. These days, I'm liking to play day twos. This is a bottom bounce, so I would usually wait for them to get all the way back to 10 cents. Not the best idea. So it's not the best example. I'm trying to find a really perfect third day surge example for you. But let's check out this one, APLD. This is a good one. Recently did really, really big volume and a big move. They're actually in the midst of some continuance on that move, right? So, but these are the days I'm interested. You can see most of the days they're not really trading much volume. But on this day here, they did 160 million in early September. I remember this move actually. This will illustrate two things right now. Well, you can see kind of the multi-day. This has been a common occurrence this year. Our bigger multi-day moves were, if you look back 2022 and then even a big portion of 2023 and small cap, a lot of these would be 1 or 2 day moves and that's it. So, so we can get into that. Let's get into the 1 minute real fast, or let's see. Yeah, we can do the 1 minute. That's fine. Just to show you kind of the morning action, what that ends up looking like on APLD right here, right? Here's that push right there, right? So these are the days I'm trading. A PR came out, right? A PR came out. A lot of volume came in the morning. So this is at 8:30 a.m. Eastern. And you get a push immediately from 3 to the 5s that then holds in the 4s, right? We got a little hold in the 3s here. So immediately for me, I'm starting to watch kind of this area. I'm watching for dips pre-market, and I'm watching for support levels that may potentially hold later in the day. Or in the morning if I'm going to be looking to dip buy, right? So that's all I do. When we're getting into the pre-market action, I start to, I'll check filings and stuff like that and see if they have shares and what their share structures are. And there's a lot more that goes into it, right, than just this. But at the end of the day, just from a technical analysis standpoint and what I'm doing chart-wise in the morning, I'm going and I'm going to chart out little areas like this for myself. Just areas where, listen, if it gets back towards highs and they pull, maybe they hold it. Okay. That's exactly what I'm doing. Right. Then I mark, and I'm always kind of starting with high day, pre-market highs. What are those pre-market highs? Post PR, where are those highs? Okay. If we're opening into those highs, I need to let it pull. And all I want to do is see it pull to some previous levels. It's kind of simple, right? And I keep it that simple in the morning. And then what it's going to look like to me are there going to be 2 potential trade. Like when I look at this chart, I see 2 potential morning trades. Okay. And if it doesn't set up that way for me, then I don't trade them. And it's really that basic. And it's either going to be this, right? It's either going to look something like this. And this is just from a risk reward standpoint. And this is kind of what I was talking about. If I'm just buying through highs, I don't really have a semblance. I mean, I can risk the last dip. I can do a lot of things, but the risk reward's not necessarily going to be great there oftentimes. And this cuts across almost everything I do. Here's that high day, right? So I'll use that as max. So I have 2 trades here once the market opens for me. It's either going to look something like this. Here's your pre-market highs. Here's your high day too. Okay. The open price in this case, because it just dumped out the gate. So generally speaking, I end up with something that looks like either this. And why I like when they actually fade more in the mornings, because if I can get this in the morning, a big panic, it's even better, right? I end up with more reward, I guess you could say, and kind of less downside. Okay. So that's how I look at all these trades. And when I'm trading them in the mornings, that's what I start to work off of. Okay. I watch tape when it gets down to levels like this, and I get excited when it gets down to these levels that I map out for myself in the mornings, especially when the markets are fit for them, And then at the end of the day, what I'm doing is price targets end up being VWAP, high day, pre-market highs. So in this case, I end up with just a few price targets. Here's my high day, right? Okay. Love you, buddy. Sorry, my son. That was my son. All right. Out, bud. Okay. I'll be right there. Right when we're done. I'll be right there in like an hour. Okay. Quickly. So we've got high a day. We've got pre-market highs, and I've got VWAP. Generally speaking, those become my targets. All right. And I keep it pretty simple like that. And that's kind of what I was saying, margin for error. So if the trade, sorry, I accidentally copied 2 of those too. If the trade doesn't materialize past VWAP, I'm basically break even every single time by that point. It's just, I like to take shares off there. Same high a day. I take shares off a high day. And if it gets to and through pre-market, I'm taking shares off. So that's, that to me has been the biggest game changer on how I play day ones. And that's universal. That's basically how I play them. There are definitely some, so there have been some nuances this year where have changed how I played them, and even I've played them less. But when I play them, it's still the same. And the idea is that, listen, man, when old me was just going to buy it and just getting excited to buy it, and when all the noobs are getting excited to buy it here, I'm taking profits there. It's an absolute rewiring of how I think about things. Okay. And because of that, I find this this margin for error for the people I teach this to. It helps them. It helps them understand that, listen, you're not going to make $1 billion all the time, but you can definitely make a living doing this. You can make a living buying the dip correctly and then selling it into subsequent levels without greed, and becoming basically as mechanical with this process as possible. That's what I want. I don't want too much bias. I don't want too much like it's going to anywhere crazy. I want my perspective to match what I'm doing, and then I can make money. You know what I mean? And I just want I want to know that, listen, yeah, okay, so if I take profits into VWAP and then it goes to, all the way to pre-market highs, yeah, it would be nice. But the rest of the time it protects me. And it's the selling into VWAP, like in this instance, if you're buying kind of the higher low or something like that, for me, it's the selling into the VWAP that would allow me to wade into the pools where shorts are reshorting. So I call it on this setup and across all my setups buying patience. And I'm buying patience by selling with the short sellers into new highs. And then I get to sit through the dips as they are going through their emotional thing. And I'm just, I'm at profit target levels, and that's how I like to look at it too. People will be reshorting it, and then I get to use their volume for now when they squeeze. Now I'm on that side of the trade where I'm long and I've been long. And I look at that as bonus for doing the right thing throughout the rest of that trade. And then really at the end of the day, I'm playing a game now of how many shares and how much to size out into each level. And that is market based and setup to setup based and all that good stuff. And how extended is it? What's the float? How dangerous is my entry and all that good stuff. There's all sorts of factors that go into it. But the spirit of what I do has to do with the fact that we talked about earlier, which is like, short sellers will be here, and on something like APLD, they'll be here, and absolutely they'll be there, and you'll 100% be here, and you're going to be here and here and here, right? That's kind of the mentality. But along the way, when it gets back towards certain lows, they're going to have to cover too, right? At a certain point. And then at a certain point, if it goes through highs, they all become demand. And that's just a matter of they're at the will of whoever's running the thing or not, So that to me is how I looked at it. APLD ended up being a nice multi-day. So here's what's great, right? So we get these key levels from day one. Well, I like to let them, especially if I'm missing day one moves. What was the high here? Look at the high. The high, and even look at this day one, for example, the range on this. If you look at the range through high a day, right? You had another 50 cents or so there. But the meat of the bone here was all sub high a day. I was kind of trying to mention that, like, I use the range that's given, and then I just try to sell into the highs on that range. And when I can do that, I'm generally speaking making money. Here's day two for me. Watch this, right? Here's day two. And this is what I've been trying to tell you about this year specifically, why I've been doing what I've been doing on the swing ideas, which are massive volume day one, right? On APLD. Specifically on these, it's got to be over 100 million in volume, and there's got to be range. And I'm talking about the swing trade idea now, because we just talked about the day trade idea, which is the dip buy based off some support from pre-market, or, ideally maybe, days before or something. There's some, you can go left and find something. For the ones that I can't, and I don't hit the day one, and even if I do hit the day one, these days, I don't stop. I don't end up. In fact, I'm more excited for it. And I hope they run without me when I'm wrong, because I want them to have more range and more volume all day. So if I miss that morning trade these days, I don't even care. In fact, I'd rather at times not get in the way of that and wait for this idea, which is the third day surge idea. Okay. Third day surge idea. And generally speaking, they're going to have a drop on day two, and or some sort of fade on lower volume. Okay. And you're going to have a ton of volume on day one. Okay. And the idea is to find that base. Hopefully it's going to base at a meaningful level from day one or in or around that. And I can play the same game, that I play on that 5-minute time frame and that 1 and 15-minute time frame on day ones in the morning. I can take that idea on to this 30-minute time frame now, right? We got the highs to 570s. a day 2 pull in the morning, and then a hold all day on low volume compared to day 1, right? Key levels holding very nicely, and that same thing, right? So same risk idea from day 1 basically becomes risk idea from day 2. Some support hopefully, and this is the 3rd day surge, and what you end up with is a lot of short volume that may not have be able to cover, or waiting for this thing to get slammed all the way. You're going to have shorts step back in, right? Absolutely, you have shorts stepping back in here on day 3 when it starts to pop up on lower volume, right? Just based off these highs from obviously the 5s from previous days. So you get this dynamic, right? And for me, it becomes the same game of how do I sell there? Does that make sense? How do I sell there? And then these days, at times we get upside down shorts, and then you get nice squeezes, right? So to me, these are the 2 setups right now for me. Well, there are more, and there are more ways to factor in. And for example, like this could also have been a reverse split pump, and then it does this, right? So what's the biggest picture? That I use the daily for that. Okay. What's the biggest picture on the setup? I usually use the daily for that. Even you go back on the daily, this is the weekly, you'll see it's running, up in here, it's going to running into something, right? Something, you better go see what that something is. But that's it, man. That's pretty much the gist of, there are so many nuances to this, obviously, but the gist of where I like to play is that, and hopefully they're going to be pumping, that. So, a lot of reverse splits, some of the 10-cent stocks, like I mentioned, whenever there's sector momentum, like we see, like Chinese stocks go off, you'll start seeing Chinese stocks PR more, all that good stuff, So
yeah, that's fantastic. And I think that, the visual of just showing like your risk versus the reward, a lot of these, day ones, they have a press release or something, and it's like, what is a good time to actually try to get into those? And, you can see like with something like APLD, even though it never really broke the, it didn't get too much above like the high of days or like the pre-market highs, you could still have a lot of, gain in there by being patient, by waiting for that morning dip. And then, basically where like the initial round of shorts are covering, that's where you're entering. And then you're looking at your targets through VWAP, through, was it high of days and then pre-market highs? So those are your 3 levels?
Yes, sir.
And
I keep it pretty basic like that, and then at the end of the day, we're in a game of maximizing our trade. So if I find myself too often, I'm at, where I'm like, damn, I took too much off, I scaled out too much too soon, I just adjust. And then when I find myself being too patient with shares and I'm giving back gains, and then I adjust. And that's kind of, for me, the cool part about how I play day 1 gappers is that, obviously there's discretion involved in what's the PR and what's, everything else that goes down. But in and of themselves, like I let the results kind of guide me a little bit for myself, right? Like, oh man, we're in a squeezer market or we're in a fader market. And that's what I'm trying to find out. So hopefully that was a little bit of a, what the main part for me, which I realized over time, and the more I got into the filings and the price action and the shorts and everything, this is why I got into trading. Okay. I used to play blackjack, and I used to play blackjack to get that little tiny bit of edge over the house. And I would count cards and do all that crap, only to get this still 1-to-1, on my trades. They all end up looking like 1-to-1 basically. And I'm either going to make 10 today on this hand, or I'm going to lose 10 outside of blackjacks and whatever else, or, 20 or 50 or 100 at a time. And to me, the thing that attracted me to trading was the ability to figure out ways to risk smaller amounts to make bigger amounts, and specifically with all the chips that are stacked against longs, and especially on day 1s for me, when I'm trading them. But it's, if my trades don't look like this every time, I don't like trading them. I'm not gonna, especially when I know they're dumping and stuff like that. I need that. If I know that, especially because listen, this setups like this, when I trade these, I swing about 50 to 60%. Some months much better. Some months I can't hit these at all, bro. Like just being real, that's reality. There are some months where I'm just laying off of them because I don't really have a good feel of how they're running them, or if they're running them, or all that good stuff. And that's fine. That's same for all my setups. But when they're dialed, that's what that looks like. And I need it to look like that, because when they're not dialed, or even when they're dialed and I'm batting 60%, it's very profitable when I can have profiles like this. And to me, it's just been one of the biggest game changers ever, you know, in terms of my trading, was to be able to look and just, this is how I look at it in my head, you know what I mean? But just to understand that's what's happening, and is a big deal. If I can make all my trades look like this, it not only gives me margin for error within my trade, but it gives me margin for over the next 1,000 trades, if that makes sense.
Yeah, definitely. And so just to kind of get into a little bit more of this, just, you know, for the audience and for myself. So, you know, day one gapper, something that's still holding up. The move is not done yet. Morning dip, you're looking for maybe the volume to change a little bit from, you know, the sellers to basically run out, for it to stall a little bit. You're using a pre-market level, you know, looking left. And so basically that's where you're trying to position into that. And then, you know, where are you wrong? Where do you stop out? Is it, you know, if it's underneath that level, or are you looking for a certain type of action under that level? Where do you stop out?
So it depends on the thesis behind the trade, but generally speaking on this, it's literally when this line crosses, I'm just done. And the thing is, I sit there and I will also watch that level to see if they're going to trap, especially if it's still extended and stuff like that. And I feel like it's going to be a shortable level. Like if it snaps, I'll watch for traps there. For example, say like this low was at 4. Or maybe a little bit higher, and I watched it, you know, trap into actually 4 or like a whole dollar level or something like that, and I see a low snap into that, and I get stopped out, I'll watch for a re-entry. But most of the time, you know, the thesis for me is, well, there's the low, they're going to push it back towards high day, you know, and I just don't really ask too many questions. I like to keep it very, very simple for myself. The whole beauty of this, and to maintain margin of error, I have to maintain this, because if I do this every time and I start to let this slip every single time, or I want it to test, or I'm playing 1-to-1 all the time, or 1-to-3 even for me is not good enough oftentimes. It just isn't it for me over time. I can't enjoy the benefit from the upside as much, because I'm leaking so much the 40% of the time. Does that make sense? So like, I make sure that I like to look at it like, if this line's broken and I think low of day has been set and the higher low, and this should be low of day, then I'm actually wrong the second it goes through it, right? So that's the way I've always looked at this trade.
That makes perfect sense. And yeah, so basically your thesis is that this is the low of day and I'm using that as my risk level. And if that breaks, you're out. And if it sets a new low of day, then maybe you'll try the trade again.
Maybe. The problem is a lot of people will get sucked into that, especially if, and just, this is my experience teaching this as well. People will they'll be like, yeah, that's amazing. They get away from like chasing through highs and stuff like that. They want to dip by lows and sell it the way that I've been describing. And they're literally just the first thing. And I did this too when I started trying to dip. I was like, the first dip, I'm just trying to get in on the first 1 minute dip. You know, the biggest advice I can give to help for this is like, get on a 5-minute time frame, maybe. You know, if it's not reversing on that kind of time frame, you know, I mean, the one's okay, but 10-15 minutes in, you know, generally speaking, is what I like to give these things. The morning pools these days, again, this is going to depend on strength of market too, right? When we're in really strong markets, the pools are not going to be as great oftentimes. The danger is like buying every dip on a fader. It's not, that's generally speaking. So that's why I say I want to know if I'm in a squeeze market or if I'm in a fader market. Because if I'm in a fader market, yeah, you know what? And I don't mind, actually. I don't mind fader markets at all. And all that I'll adjust, okay, all that I have to end up adjusting across the setup is I'll take this like this, watch. That's the setup then. That's just the setup for me. When we get into fader markets, we do that. And then maybe I'll get one of these bad boys, right? If that breaks down and I have a 2-level kind of chart like this, where maybe I only have 2 ideas for the day on it. But generally speaking, I like to let things shake and set low, and I'm not going to be just dip buying and dip buying and dip buying for no reason. You know, I don't like getting stuck into that. But if it does, you know, then it's the same sort of thing. That's what I like to do. I'll just adjust my expectations across the trade and still just bat a single. And that's kind of how I look at it. You know, it's either I'll take away all the other price targets, man, when I'm struggling and I'm on my dip buys too, I'll do that. And then I'll actually do one of these bad boys and I'll cut that in half. Sorry. I'll actually arbitrarily cut whatever my price target is in half and take some off there. So like, just to get the ball rolling for myself, these are just little tricks for myself that I've used over time and that have helped some other people I work with, you know?
Yeah, definitely. And then it was also super interesting how, this is your kind of day one process. If you're looking for a dip buy on a name that could potentially move higher, or at least, you have some mean reversion back up to VWAP or something. But then you also talked about, this is kind of like the first start. And then, you can get the volume on day two to kind of dry up, and you can get a liquidity trap on day three. And a lot of people in Investors Underground are familiar with the liquidity trap setup. So it's just nice to know that, even if you weren't able to get the dip buy on that first day, that there still potentially might be an opportunity there in 2 or 3 days or something where the volume dries up. Then it starts to creep back up towards the highs. You have the volume come back in, you have some shorts upside down, and you can have an entire other setup there. So yeah, those first day dip buys and then the liquidity traps, those seem to be like some of your go-tos. And then, as long as you can control your risk reward, and you basically have a pretty tight stop on that, then it seems to really work out a lot.
And this real quick before we kind of move on, but this is just the way I contextualize the third day surge idea in my head, and first green day bounce too. So if this were a red day and another red day, maybe the first red day only faded to 5, and then we got another red day, and then we have a first green day, same context to me. A little bit different because I like this 3-day move that they're doing, but same thing, man. So I'll take whatever the levels were from day one of the move, and those become price targets. Any meaningful levels of support, like I look at this and I look at like 5, right, as a level that may now act as some resistance. It was some support on day one on the 30 and pre-market and all that good stuff. A whole dollar level here after hours, right? It's reacted to it. Pre-market the day it ran, all that good stuff, right? So I'll look at levels like that too, and that becomes a price target. That becomes a price target, and then, and really, this is kind of how all my trades end up looking like. If I'm playing a first green day bounce or whatever else it is, I'm going to use what's been given to me. Hopefully there's some more juice in it, and there's good macro, and I'm in a good market to do this sort of thing. Because if we don't get good day ones, we don't get good day threes, right? If they're not good day ones, it's not. Everyone kind of suffers, the shorts and the longs, right? So we're in an amazing market right now where these are viable ideas, and there are going to be markets, I'm sure, very soon where these are not viable ideas. So I'm just trying to hit them while they're here,
Yeah, and I know that earlier you brought up the ideal kind of day ones. It's something with either a catalyst, it's something with tens of millions of volume, something that is like an outlier day. It's not just like a random pop on a PR with 1 million, shares traded. You're looking for something where it's like, this is one of the hottest names of the day. It's going to attract the most short sellers, the most longs. It has, an institution, possibly playing something in there. So like you have all market participants in on this, and that's how you get a good day one. And then those are the names that turn into good liquidity traps if the volume dries up and then it comes back in. Is that correct?
100%. Yep. That's an excellent description. Excellent description. Especially, you look day two, you have the morning panic. That's pretty much the most volume, and then it died off. Day one, same thing. That's a $30 million, 30-minute candle and 30 million share. I'm sorry, first few candles of the day. It's a lot of volume. The basic profile of that is over 100 million shares for me, 100, 150, depending on the price of the stock. And then on day two, I want to see that decline to usually sub 20 million. Usually sub 20. You'll see them drop down to 3-5 million. They'll go from 150 to 3 million the next day, So I've seen some of those, and that is the kind of the meat and potatoes of that. But between those two ideas, I think and then the reverse split pump should give the viewers a pretty good sample size of just some of the many things that I do. But those are kind of the meat and potatoes from a bigger picture level of how I like to look at risk. And this obviously, there's more, not getting into like reading tape and level 2 and then the fundamentals themselves, obviously, which we could talk about, obviously all day, but this is the meat and potatoes in terms of the technical analysis, and it still gives the big picture ideas of what I'm leaning on there.
So that was just incredibly helpful for people to see, someone who is a long bias trader in small caps. That's how a professional is approaching the market day to day of, looking for these big, first day runners, things with a ton of volume, things with a reason to run. They're attracting the attention of all the market participants. And then if they get a a dip in the morning, you're looking left, you're looking for the volume to change, and you're using that low of day as your risk to be able to basically trade it up or participate in the move or the clear out move up to VWAP, high of day, pre-market highs, and you're locking in at those levels. And so even if the stock never ends up breaking high of day, you can make money, whereas someone who's just kind of stumbling into the market, waiting for that high of day break that gets rejected, they're losing money on the exact same stop. So that is just incredibly helpful for you to walk through that. And then also, if you have those names on watch, but you don't end up trading them the first day, they can be on watch for 2 or 3 days later when the volume dries up, when they kind of go sideways or they dip. And then you have basically it starts to creep back up again. The volume comes back in, and those shorts who are basically nailing it from day one, and maybe some other people, they now have to cover. And like you said, those shorts now become the demand for possibly the next leg up, and you could trade that. So those are real world strategies that work. Those are ways that people can actually trade small caps in a professional way. So Roland, just thank you so much for coming on, for explaining all that. And do you have anything to add before we wrap up today?
Hey, man. Yeah, no, absolutely. Thanks for having me on. Hopefully that helps some people out there, just give them maybe some different ideas, and maybe some short sellers, it can help keep them safe, because, a lot of people are like shorts versus longs. I don't ever look at it that way. We're all kind of retail brothers and sisters here. And if it may help keep a couple shorts safe on some setups that they have been, losing on, then great. And for the longs, yeah, just understand that you want to be playing more chess and less checkers. At the end of the day, you need more to your system. You need more variables to look at, the fundamentals, understand what you're trading in the first place. I know Nate's always been a big advocate of that. You'll hear him say, know what you're holding, know what you're trading. Absolutely. If you don't, you got no chance. For the longs, especially in my opinion, you got no chance, because the odds are stacked against you. These things go down all year, all the time. There's nothing more to it. They go down all year. So for the long side, but when they do go up, they can be absolutely explosive, right? They can be amazing. So the idea is be there when they're pumping, be out of there when they're dumping, and that's the case, right? Be in with the shorts when they're covering, and be out when they are also shorting. All that good stuff. I want to be there when they're covering. I don't want to be there when they're short selling. I want to sell with them and get out of my positions in the right areas. And really, you're being contrarian. You're taking what you thought was right is wrong, in my opinion. At least for me, I couldn't make it work. The buy through high days and buy breakouts thing couldn't work for me. And I think that there's I know there's a huge fundamental reason why it doesn't work, because they dump there. And if I had millions of shares to dump, I dump there too, right? And sometimes I have millions of shares, because I buy them, and that's where I sell them too. So specifically, obviously the cheap stocks, but that's it, man. I love your guys' show and what you're doing, and I appreciate you having me on, and hopefully we help someone out today.
I know that we did help people out, and I think that people are going to get a ton of value from this. So Roland, thank you. It was a pleasure to have you on, and we'll talk soon.
Hey, brother. Appreciate you. We'll catch you soon.
Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.